The meeting comes at a time when the East African community is experiencing growth in regional trade, but businesses continue to face barriers that make it difficult for investments to move from licensing to full operation.
The sector is facing the EABC integration process.
Data from the Uganda Investment Authority shows that during the 2024-2025 financial year, more than 481 investment projects were licensed, with an expected investment value of about $3 billion and more than 53,000 projected jobs. However, only about 191 projects are reported to be fully operational, raising concerns about the gap between approved investments and actual implementation. And these are due to the non-tariff barriers. Business leaders say addressing this gap will require governments to tackle the practical challenges investors and traders face across borders. Ahmed Farah says the private sector is closely following commitments to eliminate non-tariff barriers within the East African community. He says the business community had agreed that outstanding barriers should be addressed by June, and efforts are now focused on ensuring that the commitments translate into action and make regional trade easier.
But what more often than not happens after that is countries go back to their constituencies, and private sector more often than not are the ones who now start talking to the government and seeking for continuous stays of application and remission of duties. This by and large creates an atmosphere that beats the purpose of the intended objectives for the integration of our market. What we are doing is first the directive that was given by the heads of summit in the March meeting in Arusha this year to clear all the 27 non-tariff barriers by 30th June.
Access to affordable and long-term financing is another issue raised at the roundtable. The East African Development Bank says it is positioning itself to provide patient capital for sectors considered critical to regional economic transformation. These include agriculture, tourism, minerals, manufacturing, education, healthcare, and housing.
The member countries are pursuing different development objectives. For example, we know that in Uganda today we're talking about the 10-fold growth strategy, from a $50 billion GDP to $500 billion by 2040. We know, and using the ATMs, that is agro-processing, tourism, mineral beneficiation, science, technology, innovation. Those are the ATMs.
For the East African Business Council, regional integration cannot succeed if individual countries continue to face instability, restrictions on disruptions that affect the movement of people and goods and services. Vice Chairman Simon Kahero says prosperity must be shared across the region, pointing to security and health challenges affecting countries such as South Sudan, Somalia, and the Democratic Republic of Congo.
This is because there are many different countries, and these individual countries individually keep creating the problems that we need to address. And at this point, I want to applaud the organizers and conveners of today's forum because of this Invest East Africa, the next market that matters.
The East African Community Secretariat says trade has recorded significant growth in recent years. Deputy Secretary General in charge of Trade, Customs and Monetary Affairs, Annette Semuemba, says Uganda contributes about 28% of intra-regional trade, while total regional trade has increased from about $13 billion in 2023 to $31 in 2025. Despite this progress, she says non-tariff barriers continue to threaten the full potential of the regional market.
For Uganda, merchandise trade has grown sharply, but specifically within East Africa, about 28% of the trade for Uganda is just within the community.
These have also launched the EABC East Africa CEO and Investment Forum 2026, which will be held in Nairobi, Kenya.
I think he's being represented by his...
Naomi Namsoke for NSTV.